Hey folks, Dan Frio here, the Mortgage Update. I told you, pigs get fat, hogs get slaughtered. We'll be right back. Let's see what happened today. The Dow plummeted 600 points. Why? Stay tuned. Hey folks, Dan Frio here, the Mortgage Update. What happened today? The Dow dropped 600 points. Do you think it was the coronavirus, or do you think maybe we were in for a correction that I've been calling for the past month? Let's see what happened. The Dow was down 604 points. Basically, there was no economic news out that really should have affected the market. The only really numbers that came out today was some core inflation numbers. They were about 0.1 higher than anticipated, so that didn't spook the market at all. And so that's about it. Everything points to right here. The Dow tumbles 600 points. Emergency, fears of the coronavirus. But then you start getting down to certain areas that might have refreshed. So I apologize about that. I don't think it was the coronavirus. I basically think, we were in for a correction. Somebody just came out today. The Godfather or something said there's a 10% correction coming. 600-point drop is the coronavirus. I'm still saying it was something that just spooked the market enough to make this correction happen now instead of a week or a month or further down the line. So let's see what happened today. As you can see, I'm down in sunny Florida. If you're out in the Cape Canaveral, Cocoa Beach area, I'm down there. I'd love to stop by and meet with you, see if we can if you're a realtor, maybe we can do some marketing together. If you're a mortgage advisor, let's hook up. Maybe there's some things we can have in common. We can, maybe even talk about bringing you on board. I'm looking to have a bigger presence down in the Florida area, as well as Texas, Arizona, California, and Colorado. So if you're in those areas and you're a mortgage advisor, reach out to me. I'm starting to grow the business exponentially in 2020. So reach out to me if you have any interest in seeing what we could do together. But let's get on to it. What happened today? Well, I basically went over the stock market with you, but the bond market. Here's the funny thing is, mortgage-backed securities, usually, like I say, people flee to safety. So when the stock market is plummeting, people are pulling out their money and putting it into bonds. Why didn't that happen today? I don't know. I think this is a short-term little correction in the market. A lot of people, they got caught up in the euphoria. They didn't get out of the market. Some that did have put their money into the markets, the bond market, during this run-up that we saw. Let's get rid of the 200-day average to kind of condense this a little bit more. Look at this run-up. This is crazy. This is a crazy run in the market. Usually you don't see that long of a duration of rate drops. Some of the headlines right now is saying, if we go to right here, the real estate section of CNBC, the analysts are coming out saying, rates might get in the 3% range. They are already. So in some cases. There's a lot of factors that go into the mortgage rate that you get. It has to do with your credit scores. It has to do with the kind of property you have, the loan to value, meaning the loan amount divided by the property value. There's a whole bunch of things that play a role. Sorry, I'm scooting closer so you can hear me. There's a whole bunch of things that play a role in the mortgage rates. So if you see, rates are 3%, but then when I come back, I quote you 4%. The reason being is there's some additions and subtractions when it comes to mortgage rates. Let me give you an example. Let's say, for example, you're buying a 4-unit building that's an investment property. That rate's going to be higher than somebody buying a single-family home that plans on moving into it and having it their primary residency. What the factors are, let's say the core rate is, just for simplistic reasons, 4. There's going to be a hit because the property is a 4-unit. So now that rate might be 4.25. Well, now it's an investment property. There might be another quarter or 0.3 or 0.5 increase to the rate. Making it simple, let's just say there's another quarter point to the rate. So now that rate's 4.5%. But let's say the house is, there's also different variations of loan amounts. So let's say that loan amount is $200,000. Well, there might be, let's say there's a hit for that also of a quarter point. So now you're at 4.75. Let's say you're only putting down the minimum amount needed in an investment property 4-unit. That's 20%. Well, if you put down only 20% versus 25, 30, 40%, there might be another 0.25% bump in the rate. So now you're at 5%. When you see everywhere, mortgage rates are 4%. Well, yeah, for a specific, and when we do marketing, and I do the same thing, for a small portion of the business. Meaning, if you have a 740 credit score, you're purchasing a home 20% down with a 740 credit score on a single family home. That you'll probably get the best rate in town. But if you put down 10%, your rate's probably going to go up a quarter. If you put down 5%, it might go up 0.375. So there's a whole, if your credit score is 720 and you're putting down 10%, well, the going rate's 4, you're putting down 10%, that's a quarter to the rate, so 4.25, and your credit score is 720, so that's under the top tier 740. Now you got another quarter bump, so your rate's 4.5. That's how the rates break down. So don't think that I'm trying to bait and switch you when I said, rates are out there in the 3% range. They are for a specific class of loans, not every class of loans. So that's my tech tip of the day, I guess, for mortgages. But let's see. Again, remember, pigs get fat, hogs get slaughtered. I'm even in Florida, and I'm watching the market all day, every day, to make sure that I serve my clients right. And if I see any correction in the markets, that I jump on that. I didn't post yesterday, and we had a great run up in the market. And so for those new to the channel, what we watch here, my name is Dan Frio. I do the mortgage update every day. And if you're in Chicago, you can hear me on radio at WYLL Radio and WIND Radio. I'm on WYLL Radio every weekday from 7:30 to 8 p.m. I'm on WIND Radio at Saturdays from 7 to 8 a.m. So tune in. If you're in Chicago tomorrow morning, tune in to WIND Radio. That's 5:60 a.m. And you can hear me on that. And I also I try to post every day on YouTube to just give people an update on what's going on with the market, what happened, what I foresee in the next day, couple days, week, months, what the trend is. And that's what we follow here. I'm a mortgage advisor, have been for over 30 years. If you'd like to use my services, I would love to help, especially if you're in the Florida area. I'll be down here till Tuesday. I'd love to reach out to you. Give me a comment down below. Give me a phone number. Don't give me a phone number. I don't want that. Shoot me an email, and I'll get in touch with you, and maybe we can even meet, and I can go over some things with you and how I might be able to help you. Even if you're a realtor, let's see if we can work together, do some co-marketing, and maybe try to increase your business, and let me help you there as well. So what we follow here is the MBS market. It's mortgage-backed securities. This is a bond that dictates mortgage rates. This is actually the tool or the instrument that creates mortgage rates. It's not the 10-year Treasury, the 2-year Treasury, the 30-year Treasury. It's nothing. It's this right here. This number represents the price. What happened with the price of that bond? When you watch stocks, you always check the price. Okay, the IBM stock was up 5 points today. Well, that means $5 a share. It wasn't today, but I'm just saying. So in this area here, this is dictating the price. If the price goes up, interest rates come down. If the price goes down, interest rates go up. So you're going to say, well, Dan, you said the rates went down today. Well, they didn't really go. They didn't really move. 3 ticks in the market. It's not like $3 to the bond. It's just 3 ticks. I won't go into details with that. But it's really irrelevant. It didn't change rates at all. So I consider that flat. I was surprised because as the market was crashing, normally people take out of stocks and pump into bonds, and this is a bond. People didn't do that for some reason today. I think everybody was shocked at the quickness. Again, everybody has the euphoria. Like I've been saying, if you follow me the last month, I'm like, there's a correction coming. Please take some profits off the table. We had a 600-point decrease today. I hope you took some money off the table prior to the drop. So what we do is we watch this. As you pay more, in this case, prices went down. But let's just make it simple. Let's go down to here. As you're paying more for the bond, okay, that means you're getting a lower yield or a lower interest rate on that bond. Okay, so as prices go up, the bond yields come down, meaning mortgage rates come down. That's what's been happening for the last several weeks. So right now I'm teetering, saying, you know what, I'm following this. If I see any retraction in the market, I am going to lock basically everybody, because this is euphoria in the bond market. We watch also on this channel what I call the Fibonacci levels. These are these two levels here. This is a bottom and a top. Okay, think of these as bumpers when you're bowling. As a kid, you're hitting bounce and bounce and bounce and bounce. It'll stay in between there. We're hitting the top end right here. You can see right there, we hit it and stopped right here. We just stopped short. Unless things really start there's really, the economy is basically, I'll say, flat. And a lot of people might argue with me. Employment numbers aren't great. And I see a lot of analysts say, they're crazy good. Well, they're really not. You can see by some of the news that came out today, and we'll go back to here. Some of the employment numbers came out. I think they came out. Some of the employment numbers came out today. And where is it? I apologize. Yeah, I know it came out. Something came out. Some numbers came out, and the unemployment rate stayed kind of flat, and there were some revisions in that. But there's other things that we watch, like manufacturing, shipping. There's a greed index. There's a whole bunch of factors that I watch, and please tune in every day. Don't forget to subscribe down below and click the bell, because every time I post, you're going to get an alert. A lot of the indicators aren't good news. Flat out, that's what I'm telling you. That's why you're seeing the run up in this market, because this is basically signaling, guys, the bond market's overheating, meaning the stock market the economy's not great, but people are still, they have that euphoria in stocks. So there might even be more of a correction in the stock market. I'm anticipating a 5, maybe an 8% correction in the stock market. But this number usually doesn't go straight up. As you can see over time, this bounces around, and this is nuts. So I'm watching, relentlessly on this to see if there's a retraction, because, we can easily fall back into this range easily, because if you look at this range, the midterm is right here. So that's probably a 3/8 to 0.5% increase in rates. So I don't want my clients to have a 0.5% increase in rates, so I follow this daily. So if I can be of any help to you, let me know. I help about 2/3 of the country with mortgages. You can reach out to me at 844-775-LOAN, which is 5626. You can reach me by email at D for Dan Frio, which is FRIO, at parksidelending.com, or check me out on the web at thefrioteam.com. Also, again, subscribe down below. Check me out on LinkedIn, Facebook, YouTube's, Google reviews, Zillow reviews, any reviews you want. Just Google the Mortgage Update with Dan Frio, and I hope you like what you see. So God bless. I'm going to spend the rest of the weekend down here in sunny Florida. I made some realtor calls today, and I'm just going to relax and maybe fish the next couple days. So I'll be back at it Monday. If you need me, reach out. Love to talk to you. God bless. Have a great weekend. See you then.